Hey everyone, welcome back to Corporate Decoder, the place where we unravel those dense corporate filings to find the hidden stories. Today, we're diving into ACNB Corporation's latest report, and let me tell you, they've been busy cooking up some interesting moves behind the scenes. So, what is the big news, ACNB? The parent company of ACNB Bank and ACNB Insurance Services. Incorporated decided it was time to shake things up in their investment portfolio. Think of it like a gardener pruning old low-yield plants to make room for new ones that will produce more fruit. They decided to sell off a chunk of their investment securities that weren't bringing in much return. Now, this wasn't exactly a profit-making move in the short term. They sold about $74.6 million worth of these older investments, and it resulted in an estimated after-tax loss of around $2.8 million. These old securities were bringing in a measly 1.13% yield, which is pretty low, especially considering they were set to mature in just under 2 years. But here is where the smart play comes in. They took the money from that sale, about $71.1 million, and immediately reinvested it into new securities. These new investments are designed to bring in much more money. These new purchases are spread across different types of agency securities like multifamily, collateralized mortgage obligations, and mortgage-backed securities. The key takeaway here is the yield. These new investments are expected to bring in a juicy 4.80% yield, almost 4 times what they were getting before. And they have a longer lifespan, with an average remaining life of about 5.39 years. So, what does this mean for ACNB going forward? They expect this move to boost their interest income from this portfolio by an estimated $2.6 million over the next year. While they took a $2.8 million hit initially, they figure they'll make that back in about a year and a half through the increased earnings. This kind of strategic repositioning is exactly what savvy financial companies do to adapt to changing market conditions. Importantly, this move doesn't mess with their stockholders' equity or book value per S-hair right away. That is because any unrealized losses on investments like these are already factored into their overall equity. Their capital levels are still very strong, well above what is required by regulators, and their liquidity, meaning their ability to access cash, remains solid. Even with that one-time loss from selling those old securities, ACNB is still forecasting a profitable fourth quarter for 2025. This shows the underlying strength of their business operations. Now, like most companies, ACNB includes a section about forward-looking statements. Basically, they're saying that while they believe their future plans will work out, there are always unexpected things that could happen. They mention a whole list of potential risks, like changes in the economy, interest rates, new laws and regulations, and even things like cybersecurity threats or global events like the war in Ukraine or pandemics. It is their way of being transparent about the uncertainties that every business faces. And as for the exhibits, they've included the standard interactive data file, which is essentially a machine-readable version of the report for easier analysis by financial systems. Now, looking at this from a broader perspective, ACNB is taking proactive steps to improve its profitability. They're making a calculated decision to take a short-term loss to achieve a better long-term return. This shows a management team that is not afraid to make strategic adjustments when market conditions present an opportunity. The immediate impact is a reinvestment that significantly boosts their earning potential, which is always a good sign for investors. The fact that their capital and liquidity remain robust is also crucial, indicating the company is financially sound and well prepared for any unexpected challenges. The risks they've outlined are pretty standard for any financial institution, and it is good that they're acknowledging them. The key will be how well they navigate these potential headwinds. But for now, this strategic shift in their investment portfolio is a clear positive aiming to drive better performance in the years to come. It's a move that suggests they are focused on enhancing shareholder value through smart financial management. Alright, that is our breakdown of ACNB's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.